One of, if not the most important factor in the mortgage process is your credit score. The information contained in your credit report is going to affect everything from your purchase price limit to your interest rate. Before getting into what a loan originator looks for in your credit report, let's review the general range of credit scores. Credit scores can range, generally speaking, from 500 to 850. There are three main credit bureaus that provide these scores, and loan originators base your credit score off the middle of the three. Here you can see the range of credit scores and how lenders grade them. Simply put, the lower your credit score, the higher your rate will be. With a higher credit score, you will have a lower interest rate, which is what you're after. The lowest credit score for most programs is between 620 and 640. But there are many instances where mortgages are available if you have a lower score, and in some cases, no score. So if your score is below 640, that doesn't mean you don't qualify. But once your credit score reaches 640 and above, you have access to much better interest rates. To acquire or keep a high credit score, follow these tips. First, and most obvious, pay your bills on time, every time. No exceptions. I know that this seems almost too obvious, but this is the number one cause of low or lowered credit scores. Be cautious of how much debt is accrued on your credit cards. Never use more than 30% of your credit limit. For example, if you have a credit card with a limit of $10,000, never owe more than $3,000 on it. If you were to charge $3,500 on that card and pay the minimum balance, which is most likely just going to be the interest, your credit score will be negatively affected. If you continue to only pay the interest and do not pay your balance down to at least 30% or below, your credit will remain negatively affected. Student loans can be an issue as well. Much of this depends on whether or not you are on a payment plan, if payments are deferred, and for how long. If there aren't enough trade lines in your credit history, don't worry. Things like insurance payments, utility payments, and rent can often be accepted as a trade line. However, it is important that you work to build good, solid credit, so it would be a good idea to look into secure, lower interest, and even prepaid credit cards to help establish trade lines. Now, for whatever reason, when most borrowers decide they are ready to purchase a new home, there is an itch to purchase a new car that creeps up from nowhere just begging to be scratched. When car dealerships run your credit, which they will try to do, your credit score will take a pretty severe and immediate hit. If you purchase a car, your credit will not recover for a couple of months. So spread out your car shopping and your home buying. If you stick to these tips, you can be sure that your credit score will only get better. If you would like to know more about the mortgage process or are curious about homeownership, please contact us at Open Mortgage today.